Hi, how's it going everyone? My name is Hank. In this video, we're going to be talking about Facebook or Meta platforms or whatever you prefer. So after their latest results, their shares have been down by around 20%. And I just want to go see their financials to see what exactly is going on here. Are they actually a company that's going down? Or is this a complete overreaction by the stock market? As we can see here, Facebook is down by a massive amount, by more than 20% over the last 2 trading days. And this is just a giant dip after they've been fairly consistently climbing for the better half of last year and start chopping around earlier this year. And this giant dip happened exactly when they released their full year results. So let's take a look at what actually happened. According to the CNBC article, Facebook shares plunged more than 20% on weak earnings, big forecast miss. Now, it all sounds very serious. Facebook earnings came below expectations in the fourth quarter, and company says numerous changes are ahead in the first quarter. And there's inflation, supply chain issues. Let's see what exactly has been happening. So here are the results. Earnings per share are $3.67 versus $3.84 as expected by the analysts. So earnings per share is down a little bit from what the analysts expected. The revenue is $33.67 billion versus $33.4 billion as expected by the analysts. So this is for the fourth quarter of the year. Facebook also missed estimates with user numbers. Daily active users were 1.93 billion versus 1.95 billion, a little bit less than analysts suggested. Monthly active users is also a little bit less, 2.19 billion versus 2.95 billion. Average revenue per user is $11.57 versus $11.38. So its revenue per user is actually a little bit higher than what is expected by the analysts. So overall, it seems like everything is going down and the analysts are expecting a lot more from the company and it's just not delivering. So let's have a look at how they actually compare to what they've done in the previous year. So in order to find that out, I went and dug out their fourth quarter and full year results for 2021. So let's have a look at what actually happened that's been so terrible. So for the year ended December 31st. Now, Facebook is just a giant money-generating machine. So the total revenue here is $117 billion. And that's for the year ended 2021 versus the revenue that they generated in 2020, which is $85 billion for the full year. Year over change is a 37% increase. If we look at their net income, the net income is $39 billion for 2021 versus $29 billion for the year 2020. And that's a 35% increase for the year. Now, I don't know what anyone would say, but a 35% increase in income for 1 year is definitely not a bad sign. In fact, for pretty much every single other company under the sun, it's probably a very good sign. All right, so let's have a look at some of the other figures here. Daily active people. It's quite funny that they have to use daily active people, but obviously you have to be politically correct. So daily active people is 2.82 billion for December, an increase of 8%. Monthly active people was 3.59 billion, an increase of 9%. Active users were 1.93 billion, increase of 5%. Monthly active user, 2.91 billion, increase of 4%. In terms of ads for the year 2021, ad impressions increased by 10%. Average price per ad increased by 24%. And these guys have so much money on their hand that they even carried out a bunch of share repurchases, which serve to only drive the price of their shares up. So now let's have a look at their results based on their segments of their business. So they have their core segment, which they call family of apps, which includes Facebook, Instagram Messenger, WhatsApp, and all those related servers. And their Reality Labs, which is the augmented virtual reality hardware and software stuff. So these are the metaverse stuff. And family of apps is their traditional Facebook-related programs. Okay, let's go down and have a look at some of the financials for their different revenue parts. So total revenue, 2021, $117 billion. 2020, $85 billion. So from their core programs and apps, $56 billion from their Facebook, Instagram, WhatsApp, etc., versus $39 billion in the year 2020 from their core range of apps. Now, in their reality labs, which is their metaverse apps, they had a loss of around 10 billion versus a loss of around 6 billion in 2020. So as they move more towards their meta platform, virtual reality and stuff, it's actually quite a new section for them, and they're still losing a lot of money from that total area. But if you look at the total income from their operations, they still have a net $46 billion gain in 2021 versus the $32 billion gain from the year 2020. So they are a business that makes a ton of money. They spend a ton of money, but they definitely not running out of cash anytime soon. So what can you actually say about this? The amount of overreaction is actually astounding when it comes to Facebook. And it's not like they have a ton of competing services. Sure, there's other social media platforms. But if I were to say, tomorrow you're not allowed to use Facebook, you're not allowed to use Instagram, or if you're not allowed to use WhatsApp, it would affect so many people so much that that's simply not going to happen. Facebook, Instagram, and WhatsApp and all their subsidiaries, they're still going to be around. They're not going away. They are simply not going away anytime soon. It doesn't matter if TikTok is catching up. Facebook, Instagram is not going to go away anytime soon. So what does that actually mean if you look at the chart? Should you actually buy into Facebook? I am personally willing to load up onto more Facebook stocks, even though I already have quite a few Facebook in my portfolio already. Currently, Facebook is trading at around $240 mark. If we look at roughly the support and resistance where people are really interested in buying into the stock, so at around the 250 mark seems to be a relatively good support area where every time you hit the 250 mark, a bunch of people come in and try to buy the stock because they think 250 is probably a good enough price. If ever Facebook stock was to go down even further, you're probably going to be looking at the 210 price, which is another support level for Facebook, but I find it really hard to believe that Facebook would drop down to that particular price. If we scroll back a bit, back in time, we can see that there is another potential support around the $220 mark. So basically, there's a whole bunch of support levels that people are willing to buy Facebook. So overall, what can I say about all of this? Regardless of yours or my personal feeling about Facebook as a company, which they might have done some pretty shady things in the past, like sharing data, leaking data, you simply cannot deny the fact that Facebook is a giant money printing machine. And there is absolutely no way that they're going away anytime soon. So if you are okay with the company, if you are still going to be using their products, there is absolutely no harm in picking up some of their shares while they are being beaten down at the moment. But of course, their share price may drop even further. That is definitely possible as well. And they may take quite a while to get back to their all-time high levels. But if we look at what happened to Facebook historically, every time Facebook had some scandals, they had like a giant dip in their share price. For example, when they had the Cambridge Analytica scandal, their share price dropped by a significant amount, but they always end up bouncing back over time. So really, if the company doesn't align with your ethics when it comes to investing, you shouldn't invest in the company. But if you are looking for a profitable company for the long term, Facebook is, or Meta platform is still definitely a good choice. And that's about it for this video, and I will see you guys next time.